A very good evening to all the viewers. As you all of you know, we are having this fourth webinar from the Mangalore branch of SIRC of ICAI. And today's webinar will be taken up by a chartered accountant from Bangalore, CA Gururaj Acharya, who is not new to our branch. So he will be taking up a topic called as relief under various acts due to COVID. And the acts that will be covered are income tax, GST, the various labor laws, and also banking. So before we start the session, we also have with us the chairman of our branch, CA SS Nayak, as well as CA Gautam Paidi, a member of the managing committee of the branch. So I request CA SS Nayak, our chairman, to kindly welcome the viewers for today's webinar. Over to you, sir.
Good evening, friends. This is our consecutive fifth webinar of Institute of Chartered Accountants of India, Mangaluru branch. We are very proud and we are privileged to present you various topics on current affairs. Nevertheless, our Acharya means there are three types of Acharyas. One is Guru, who is called teacher. Another is Acharya, who is a professor. Then Pracharya, principal. Gururaj Acharya, even though by name he is a Acharya, he is not only Guru, not only teacher, not only professor, he is a principal for all our chartered accountant fraternity as a friend, philosopher and guide. On this auspicious occasion of Parashuram Jayanti, may Bhagavan Parashuram bless all and give strength to overcome challenges. So, it is greetings and best wishes on the occasion of Parashuram Jayanti. It is said that Parashuram hai Bharata pratik, Ram hai Satti Sanatan ka pratik. इस प्रकार परशुराम का अर्थ है पराक्रम के और सत्य के कारक। परशुराम जयंती की हार्दिक बधाई। All our Mohammedan friends, wish you all happy Ramadan. I know that from yesterday fasting has been started. You can make use of this fasting time, praying God as well as by attending to our webinars. So today's topic is impact of COVID-19 on various laws, income tax, GST, banking, ESIC, PF and other laws. So friends, we are aware that after the lockdown, our finance Nirmala Sitharaman has come out with certain announcements and measures. The first of such applicable to all business people is, and for all of us, is postponement of various deadlines under the provisions of income tax, GST, Companies Act and other areas. Of course, complementing to that, our RBI Governor Shaktikant Das, he has two bazookas, Bazooka 10 on 27th March and Bazooka 20 on 17th April. So in Bazooka 10, lot of announcements have come, that is moratorium for all loans for a period of 3 months, that is March, April and May. Not only that, lot of liquidity has been pumped into the banking system in order to make banks to lend. So not only that, they have suggested COVID-19 loan scheme. That is, if people are having up to 5 crores limit, 25% of the limit they can apply, and above 5 crores they can apply for 10% of the limit under COVID-19 scheme. So more than these details, our Pandit as well as expert CA Gururaj Acharya sir will explain regarding that. So to 17th April also additional liquidity has been pumped into the system, of course, because that reverse repo rate That is, reverse repo rate means bankers, when they deposit money with Reserve Bank of India, the return which they are getting. Earlier it was negative rate and they used to deposit with Reserve Bank of India instead of lending. Now, since the reverse repo rate has come down substantially, they are incentivized to lend rather than to deposit with Reserve Bank of India. Hence, our motto is "Ya Yesha Sukteshu Jagarti." That means when others are on sleep, we should be awake. Even during lockdown, we are conducting lot of programs that webinars you might have seen all over India, our SIRC and almost all the branches, they are very busy conducting webinars. So we are awake when others are asleep. Now time has come to deliver. Immediately after lockdown, we should advise our customers how to go about it, for which our best resource person, CA Gururaj Acharya in the field. He is a veteran CA, he is a veteran cost accountant, he is a veteran banker, being a director of State Bank of India. So I can simply say, Gagano Gaganakaraha, Sagarasya Sagaropadi, Gururajasya Gururajareva Samam. So there is no comparison to CA Gururaj Acharya sir. And are waiting we are waiting some stimulus for our economy revival. Central government as well as our government of Karnataka has not come out with any stimulus package for MSMEs and businessmen so far. Let's hope for the best and wish you all happy Akshaya Tritiya. Tomorrow is Akshaya Tritiya. First time in the history of our what we can say in our life so far, all gold shops are closed on Akshaya Tritiya. Very unfortunate for all lady members as well as ladies in the house. So, with this brief note, wish you all happy Purusharam Jayanti, happy Akshaya Tritiya, and happy Ramadan for all my CA fraternity friends. And over to CA Gautam Pai for introducing CA Gururaj Acharya.
A very good evening to all our viewers as well as our resource person and committee members on the screen. This evening we have with us Sri Gururaj Acharya sir, someone who is very near and dear to all us Mangaloreans. Gururaj Acharya sir hails from the temple town of Udupi and brought up in the Iron City Ballari and is now well settled in the knowledge city of Bengaluru. He has completed his articles under Messrs. Guru Prasad and Co. Ballari. He is presently the senior partner of the firm Messrs. KG Acharya and Co. at Bangalore, specializing corporate finance, corporate taxes, and company law. There are a lot of feathers in his hat. To begin with, he bagged the first rank at during the BCom exams at the university level. Thereafter, 21st rank in the intermediate exams of CA exams, and it went on with the final rank, 10th final rank of our CA final exams. It did not stop there. Further, sir went on to bag the first rank in the intermediate ICWA exams and the third rank in the final of ICWA exams. Sir is a member of Bangalore Financial Reporting Review Group, formulated under the Financial Reporting Review Board of ICAI New Delhi. He was the director on the board of directors of State Bank of Mysore. Sir was a member of the Karnataka State Level Audit Advisory Board. He was a co-opted member of Expert Advisory Committee and Committee on Accounting Standards for Local Bodies by our Institute, New Delhi. He has authored a book titled Internal Financial Control, a practical handbook on audit report on what can go wrong, published by the Karnataka State Chartered Accountants Association. He is an eminent resource person on accounting standards and standards on auditing, Companies Act 2013 and LLP, corporate finance and financial analysis, corporate tax and tax audit. Sir, we are indeed delighted to have you here with us this evening. And on behalf of our committee, branch, and all the viewers, we welcome you. And also, I hand over the session to you. Over to you, sir.
Good evening to all of you. I should specifically thank Mangaluru branch for giving me this wonderful opportunity of sharing my views on the latest development. When you share the views, I don't know whether the viewers get the subject matter better. It is definitely the person who is presenting, he would definitely get a mastery over this particular subject. So thanks Nayak, thanks Gautams, there are Gautams there. So I would make use of that plural there, Gautam Pai and Gautam Nayak, for enabling me to enrich my knowledge by coming on this wonderful platform. I should congratulate Mangaluru branch in particular because I have been addressing webinars in the last 10 days, almost 10 sessions I have addressed. But this particular platform, what you have selected and the manner you are going through is one of the most professional manner in which you are going through. So in the Golden Jubilee year of Mangaluru branch, I was fortunate enough to be the first speaker on 13th of March, where I delivered a session on Caro to 2020. That was the first session of Mangaluru branch, but that was the last seminar which I addressed in this season. Although I have been addressing webinars, the last seminar, in fact, Mr. Nayak was bold enough to override the institute's mandate that there should not be any seminar from 12th. That 12th was the last date for conducting the seminar, but he went on because commissioners of income tax and the principal chief commissioner of income tax were all invited for the program, and public were all invited. So he took the courage of defying the institute's verdict and going ahead with this with that particular seminar. So I had the fortune of meeting all the members at the Mangaluru branch, and today I have the good fortune of presenting before you my views on the various changes in the various laws which have been announced in the last 1 month's time. In fact, Mr. Nayak went on to say that gold is not being available, although tomorrow is Akshaya Tritiya. Radhika, I saw her comment saying that online booking of gold is available. So those of you who are interested in online booking of gold, you can go ahead. Otherwise, ಕನ್ನಡದಲ್ಲಿ ಹೇಳುವ ಅಂದ್ರೆ ಬಂಗಾರ ಸಿಗ್ಲಿಲ್ಲಿದ್ರು ಬಂಗಾರದಂತಹ ಮಾತುಗಳನ್ನು ಆಡಿ ಅದೇ ಆ ಬಂಗಾರದಂತ ಮಾತು ಅಭಿವೃದ್ಧಿ ಆಗಿ ಅಕ್ಷಯವಾಗಲಿ ಅಂತ ಹೇಳಿ ಹರಸುತ್ತಾ ನನ್ನ ಒಂದು ವೆಬಿನಾರ್ ಅನ್ನು ಶುರುಪಡಿಸಲು ನಿಮ್ಮಲ್ಲಿ ಆಜ್ಞೆಯನ್ನು ಬೇಡುತ್ತೇನೆ. So let me go. Very interestingly, we are in one of the interesting times affected by COVID-19. And I always ask this question, what is the full form of COVID? The formal full form of COVID is coronavirus disease arising in 2019. But another friend of mine, he corrected to say there is a new terminology or a new abbreviation for COVID. COVID stands for China originated virus in December 2019. So true. It was the Chinese who were responsible for this. Had they contained, or at least if they could not have contained, if they had warned the world at large that there is a pandemic which is coming out, maybe we would have all been saved from this situation. So that's why China originated virus in December 2019 is more apt than coronavirus disease. Be it as it may, corona is proving to be an invisible enemy, which all of us, I'm sure, will be able to overcome. But the point is, this corona or the situation has arisen on account of globalization, but the fight against it has to be absolutely local. I mean, so local that in Bangalore, wards have been closed based on their municipality. You must be looking at the TV. Padarayanapuram is totally closed. I mean, I cannot enter that area, or those people cannot come into this. So the fight has to be local, sometimes local enough to the extent of being inside your own house. A couple of years ago, I addressed one of the sessions in the ICAI Institute, wherein the topic which was given to me was compliance management in a VUCA world. Now, what is VUCA? VUCA was a terminology which was invented by the army people during the Second World War, which was an abbreviation for the terminology volatility, uncertainty, complexity, and ambiguity. What can be more VUCA than the situation which we are facing now? If you are talking about volatility, The share market is going up and down so much that every day it is losing 2,000 points and some days it is gaining 1,000 points. What can be more uncertain than whether the lockdown which has been announced by our Honorable Prime Minister will open up on May 3rd or will it go beyond? What can be more complex than working out the various complexity involved in probably the salary calculation? Do I have to pay salaries to my staff during the lockdown period? Do I have to remove some of my employees? This could be various complex business decisions that I have to take. And speaking about ambiguity, there are a lot of ambiguous situations which we all have to face. Let me give you a simple example. The material which has moved out of my premises on, let us say, 20th of March and lying in the port to be picked up by the port authorities for shifting it to the, let us say my customer is in America. Now, I have already invoiced such a transaction for 5 crores. I have already invoiced, but the material is lying on 23rd when the lockdown was announced. The material has not moved out of the shipyard. Do I consider that goods which have moved out of my premises but has not yet reached my customer as a turnover for the financial year 1920, or should I have to defer it to the financial year 2021? Very ambiguous decisions may have to, there could be ambiguous situations based on which I as a chartered accountant will have to take the decision. Well, I'll try to answer all these questions as I go forward, but before that, let me set the tone for the today's discussion. Is government had a big dilemma as to whether to save lives or to save livelihood. And our Honorable Prime Minister took the right decision of saving the livelihood, saving the lives, even if it costed some people's livelihood. So what are the various measures taken by the government? First of all, they invoked one of the important acts which was lying dormant called the Epidemics Diseases Act 1897. And also they invoked Disaster Management Act 2005, by virtue of which they could announce for everybody to shut their shutters and stay in their home, stop all their activities and just be inside their house. In Bangalore, the 40-day lockdown actually went beyond it because 22nd, the whole of India was on a Sunday curfew, and beyond that 23rd, 24th, Bangalore was asked to be locked down, and thereafter 40 days, and we don't know further if there is anything more happening, at least for Bangalore. Then, in fact, what was discussed was one COVID positive person can affect 406 persons, but this can be limited to 2.5 persons with social distancing. Let us talk about the experience of Wuhan, where this particular virus originated. Wuhan was closed for 76 days. We chartered accountants, let us be very proud to say that we are not afraid of lockdowns. Whenever we used to prepare for our CA exams, we were always under the lockdown. At least I'm sure all of you must have gone through that experience. I can only share my experience. I was under a lockdown for my CA final preparation for 5 months. I did not get out of the hotel where I used to read. I had a room in the hotel. I know that Mr. Pannaraj is live on this particular program. He is listening to that. He is witness to that particular scenario. I was locked down in the hotel for 137 days precisely for preparing for CA final examination. I'm sure that would have been the experience of each one of the chartered accountants who are live on this particular program. So lockdown does not affect us, affect chartered accountants in particular. And today, with so much of law changes or the announcements being made by the government, we are all busy even during the lockdown. In fact, I am more busier than otherwise during the lockdown. So what are the various relief measures that have been given out by the government in this to meet the COVID-19 lockdown situation? Nirmala Sitharaman, as the chairman, Captain Nayak, I would like to call. Captain Nayak went on to say, Nirmala Sitharaman came out with the press release initially, and thereafter there was a taxation and other laws, relaxation of certain provisions, Ordinance 2020, which came out on 31/3/2020. Now, what is this? In short, I will call it as an Ordinance 2020. Ordinance 2020. What is an ordinance? Whenever the Parliament is not sitting, is not having a sitting, And if there is any law which is to be promulgated, the cabinet makes the law and gets it passed through the president, and the changes which had to happen immediately got notified on 31st, got promulgated as an ordinance on 31st of March with respect to income tax, GST, customs and indirect tax, which I will be talking in detail. Then they also came out with a lot of notifications and circulars relaxing certain compliances with respect to Companies Act, Insolvency, Bankruptcy Act and Financial Services. Then, as Captain Nayak went on to say, RBI governor came twice with his press statements, which actually became a mandate for all the banks to follow on 27th of March and later on again on 17th of April 2020, which we will be looking into the detail. And then there were a lot of stimulus packages again announced by our Honorable Finance Minister Nirmala Sitharaman by virtue of a press release on 26th of March. It did not stop there, and I'm sure it will not stop there, because the relief given now so far is not sufficient. I'm sure there may be some more in the making. I'm told that there are a lot of relief yet to be announced, which has to be announced in any case, and we can have a discussion on that later on. Our Vice President went on to make a statement which probably shows the intent of the government. What was the statement made? The concern of the economy can wait for another day. Those of the health cannot. A very powerful statement which goes to prove that the government is in the mood of saving lives, even if it means costing the livelihood of the people. In fact, let me tell you, our budget, the budget which was presented by the Finance Minister on 1st of February 2020 was for a total outlay, came out for a total outlay of 30.42 lakh crore. When a 30.42 lakh crore gets announced, they say that the fiscal deficit is to the tune of about 3.5%. Does it mean that it is 3.5% of the outlay of 3.42 lakh crores? Let me warn you, friends, when they talk about fiscal deficit and talk about 3.4%, what they mean is the total outlay of the budget is 30,42,000 crores, 30.42 lakh crores. But fiscal deficit of 3.5% is in comparison to the GDP. Very interestingly, if you look into the amount of fiscal deficit, it is an alarming 7.96 lakh crore, which means for a budget outlay of 30.42 lakh crore, the total deficit in the budget is 7,96,000 crores, which for my discussion, I will say 8 lakh crores. So 30 lakh crore budget outlay, 8 lakh crore is the deficit, which actually goes to about 25% of the total budget is a deficit. What they talk about 3.5% is 3.5% of the GDP. They compare the GDP for when they talk in terms of fiscal deficit percentage, but the actual percentage for a chartered accountant is what is the gap to be funded. The gap to be funded is about 25%. Let us talk about 30 lakh crore. How does this 30 lakh crore come to the government? Approximately about 10,65,000 crores, say 11 lakh crore comes from direct taxes, income tax and corporate taxes, and 5.5 lakh crore comes from GST. Now, why did I put this in perspective? Just to understand that the government's expenditure of 30 lakh crore will go up, and the revenue, I was just not talking about the direct taxes of 11 lakh crore and GST of 5.5 lakh crore, will definitely go down, which means the fiscal deficit will be much more than what has been shown in this particular screen of about 8 lakh crore. It may be much more. Therefore, the government has to present a version 2 of the budget 2021 itself. So that may be the requirement. Let me also put the things in perspective. India cannot be compared with Italy, because the size of India is so huge that the various states that we are talking about in India itself comprises of so many countries. For example, Karnataka is equivalent, the size of Karnataka is equivalent to the size of Italy. And as you can see the numbers there, United States is leading the chart with 9,25,000 cases of COVID positive. Italy is about 1,93,000 cases. And you compare that with Karnataka, it is 489. I think we are doing a great job. Thanks to our country, thanks to our Janmabhoomi, maybe it is protecting us from this particular invisible assassin. putting it on a very lighter vein, this particular statistics, it looks like it is an Olympics gold medal where United States is leading the chart and India is trailing. We don't mind trailing on this particular matter. So certainly India is doing well. Of course, we still have 24,000 cases. Karnataka is doing very well. Bangalore is okay, but I think Mangaluru is trailing, and I wish that it stops at that number and goes on to reduce further. Now, what is the reason for all the thing? One of the things we keep telling, how do we overcome this particular situation? Unfortunately, the entire economy is lopsided. It gives too much of focus on entertainment rather than on research, rather than on people who have to actually perform. I mean, this particular slide says it all. I mean, we give so much of importance to Shah Rukh Khan, to Virat Kohli, to MS Dhoni, and forgetting about the real heroes, the doctors, the researchers who actually form the real wealth of this country. Now you look at this, it says that you give the footballer 1 million euros a month and a biological researcher 1,800 euros. You are looking for a treatment now. Go to Cristiano Ronaldo or Messi and they will find you a cure. What a viparyasa statement that is. So let me come to another interesting point for the discussion today. The entire situation, the economic situation, just as we are segregating the world history into before Christ or before the Common Era and the Anno Domini AD, there will be a situation where we may have to talk about before Corona, after Corona, and what did we do during Corona. And during the Corona situation, we still will have a situation where during lockdown and after lockdown, and the worst possible is there could be multiple lockdowns if relapse happens. So we are just trying to say that there could be, for all our purposes, I mean, if we are talking of good times, we may say, okay, that was because it was before Corona. So maybe in our comparatives, we always say in the financial statements, we need to have comparatives. Maybe I will have a comparative in the last 5 years. Maybe when I'm doing the comparative in 2022, 2023, I will say that before 2020, they were all, I will shade it before and say, shade it in a different color and say it was all before Corona period, and thereafter it was after Corona period. I mean, this is maybe my prediction that could be the way. And talking in terms of accounting, we always have a concept of operating profit. What is operating profit? EBITDA, earning before interest, taxes, depreciation, and amortization. Now to this, it may look as though it is a joke. I mean, a lot of WhatsApp messages came to a lot of you, coming on a mug and all this stuff, saying that earning before interest, taxes, depreciation, amortization, and the coronavirus. Now, it may look like a joke for a lot of people, but for an accountant in particular, this is not a joke. He may have to literally come out with a line item called the expenditure on account of Corona. Expenditure on account of Corona. It may not be told like that in the P&L account statement. I may call it as an extraordinary item, a separate line item in the profit and loss account to put all my expenses which I have incurred during the lockdown period, to show that these were exceptional items which I had, let us say the salaries that I pay during the lockdown period. If I put it as a normal expenditure and if I don't have any revenue, to that extent, isn't it extraordinary? I mean, I have to put it under the extraordinary item instead of putting it under the normal salary heading. So lot of expense. So, and then when I actually make the comparison, I will say what was my earning but for that particular lockdown expenses. I'm just giving you an example of salaries. There could be like that various other expenditures, like the impairment that I may have to do on my property, plant and equipment because of the surplus capacities that I built up. There could be provision for bad debts which I have to write off. I mean, the bad debts which I have to write off because of so many of my customers not able to pay me the money because of this particular coronavirus situation. And again, before I go into the topic particular, let me just warn you that there is no extension of financial year. There are a lot of rumors happening around saying that the financial year itself has got extended, or there was an expectation. But what happened was Reserve Bank of India came out and made a statement that the financial year of Reserve Bank of India will end on 30th of June. Let me tell you, friends, Reserve Bank of India's financial year always ended on 30th June only. They had an year end very peculiar, starting with 1st of July, ending on 30th of June. This was there historically from the time Reserve Bank of India was set up. In fact, this February, they took a decision that they will fall in line with the uniform financial year, which the rest of us are following from April to March. They took a decision in February, and in April or around March, they took a decision to go back with their immediate decision took in February and said, we will go back to our June year end. So the moment Reserve Bank of India said that we are going with the 30th June year end, as followed earlier, most of the press went on to say financial year end for everybody got extended. The answer is no. There is no extension of financial year. Now, before I go in particular, I wanted to ask a question. What is that question? Is the following statement correct? The major impact of COVID on business happened in India at least from 23rd of March. So therefore, the major impact was in April 2020. So in financial year 1920, the business was closed down only for 7 days. And therefore, the impact of Corona is felt mostly after April 2020. So therefore, one of the persons, in fact, when I was addressing the Karnataka State Chartered Accountants Association, one of the issues which was thrown open to me by one of the chartered accountants was major impact of COVID on business is felt after April 2020. Therefore, financial statement of 1920, the last year's financial statement, will not be impacted much. What do you think? Is that statement right? As you think, I'll just have a sip of water. Let me tell you, the intent behind this question was something like this. It was closed down for approximately, let us say, 10 days in financial year 1920. Does that mean the impact was only to the extent of 10 divided by 365 days? Because 10 days was impacted over a period of 365 days in the financial statement 1920 and more in 2021. Let me tell you, as accountants, our entire accounting standards are built in such a fashion that the events occurring after the balance sheet date will have a say on the financials of the previous year till the balance sheet is signed off. So since the financial year 1920's balance sheet is still not signed off, the events which have happened subsequent to the balance sheet date will have to be reckoned for the financial year 1920, and therefore the impact on financial year 1920 is much more than what will be felt in 2021. Or to put it the other way around, the financial year impact of 1920 will have to be provided for, whereas when we drop the financial year of 2021's financial statement, 2021 financial statement in the next year, most of the events would have actually occurred and I don't have to make an estimate. So estimates are to happen in a big way for financial year 1920, wherein the role of a chartered accountant will be much more. I don't mind spending, before I get into the law in particular, to talk about what could be the impact on the financial statement of 1920. I will go to describe that on a very standard by standard. Look at what are all the changes that could happen by virtue of COVID-19 situation in the financial statement of 1920. If you look into accounting standard 1, going concern, which is a fundamental accounting assumption, could be disturbed. A financial statement of a company could get disturbed on account of the going concern issue. So therefore, if the going concern is impacted, I have to redraw the financial statements accordingly. When I talk about accounting standard 2, valuation of inventories, inventories have to be valued at cost or net realizable value, whichever is lower. I'll give you a simple example. Cost, we all know. What could be the net realizable value? Let us say I'll give you a situation. We know of a brewery unit, or a brewery unit or an oil unit or some liquid chemical manufacturing unit, which had about 50,000 liters on 31st of March, valued at about 50 lakh rupees. The cost of which was 50 lakh rupees. So I valued it at 50 lakh rupees on 31st of March. But after 31st of March, on 10th of April, I had, because the liquor or the beer or whatever was distilled in that particular distillery has a life of 15 days. I mean, if it is bottled, it can have a longer life, but the value of the liquor in the distillery can only be 15 days. So what I know is they've actually removed the entire 50,000 liters and drained it out in the drainage. And today's value is literally zero. Now, what is the net realizable value of that inventory? 50 lakhs as on 31st of March, zero as on today. Do I make it zero as on 31st of March itself? The answer is given in Accounting Standard 12, which says that if it is not going to recover, the subsequent events will determine the value of the liquor as on 31st of March. Although it had 50 lakhs value, then the net realizable value arising out of the subsequent events goes to prove that it was zero. So I'll have to consider the events occurring after the balance sheet date to bring the value of inventories to its present value. Cash flow statement will be a collateral damage. I mean, a lot of cash will not flow. That is what I meant by that. Contingencies and events occurring after the balance sheet date, events occurring after the balance sheet will have to be taken into account in a very detailed manner. Net profit or loss for the period. This is a standard which talks about extraordinary items. So you'll have to provide a line item for extraordinary item and go on explaining what the extraordinary item will be. Construction contracts, there may not be too many constructions happening. So last year I would not see big impact, but current year it will have a big impact. Revenue recognition. Yeah, I just talked about the goods which have moved on 23rd of March or 20th of March from my factory with the invoice, with the GST invoice, with the e-way bill, but has not moved out of the port, so therefore it has not reached my customer. So on 31st of March, it is still lying on the port. Do I consider it as my revenue? Let us say it's a 5 crore material which I have dispatched. Do I consider it as my revenue, or do I have to postpone my revenue? Accounting Standard 9 gives the answer for that, which says that you cannot recognize the revenue unless the risk and reward in the goods have got transferred to the user of the asset. So in this case, if the buyer of the asset has not assumed the risk, then although I have not removed the invoice, although I have removed the material out of my godown, although I have paid GST, although the e-way bill is raised, I may have to de-recognize the revenue, and I should not recognize the revenue. The alternative situation is, even if he has accepted the goods, if I am not certain of the collection, if I am not sure of getting the money collected, then also I may have to postpone the revenue. So very, very interesting situation we may have this time during our audit, to have the proper cutoff to see whatever dispatches have happened. And there could be a consequential effect of this, which we had in most of our own cases. Lockdown got announced after 15th of March, but between 16th of March to 31st of March, I had estimated maybe another 20 crores turnover I will do. I had done 80 crores turnover up to 15th March, and I estimated that 100 crores is my turnover for the financial year 1920. And I have paid my advance income tax on 100 crores, assuming 100 crores will happen. Now what has happened, interestingly, is in this 20 crores, since it did not happen, I had paid about 4 crores more on account of this 20 crores. Now that this is not happening, when I go back to my drawing board, now I realize that I am eligible for a refund of 4 crores. And look at the viparyasa, if I have to say. In the very next year, as soon as the lockdown gets opened, I will dispatch this 20 crores worth of material. And I have to pay the advance income tax immediately in June. Wait for the refund of this 4 crores. So therefore, I have made a representation, and I also sent a representation through KCA to the CBDT to come out with a situation where, in such a situation, you must permit me to carry forward, as a one-time option, to carry forward my refund eligible from financial year 1920 to the first quarter, or the advance tax should be rolled over, just like they are giving me the option under Rule 37BA to carry forward the TDS, the income in which I am offering in that year, I can carry forward the TDS. So in the same manner, they should allow me to give this as a one-time relief because of the extraordinary situation. Accounting standard 10, 26, 28, I will have a different issue where depreciation has to be provided even during the lockdown period. Then I have to review if there are any changes in the useful life and residual life because of the change in the situation. And there may be a tremendous amount of impairment that I may have to provide. Now, what is this impairment? There are a lot of external reasons which trigger impairment, because of which my carrying value is higher than the recoverable value. And what is recoverable value? Recoverable value is the higher of net selling price and the value in use. So whichever is higher, that becomes the recoverable value. I compare it with my book value. If the recoverable value is higher than the book value, no impairment. But the recoverable value is lower than the carrying value or the book value, then the difference is what has to be accounted as impairment. And unfortunately, this impairment will not be allowed for income tax purpose. There could be tremendous amount of forex losses because the rupee, which was about 67, 70, went down to touch 77 rupees as on 31st of March. Government grants could be a very interesting topic to be dealt with. Now you will see further that in certain situation, the government has actually come forward to pay the employee provident fund subject to certain conditions. Now, how do I take this employee provident fund? Do I take it as a government grant? Now, what is happening is, if I am paying, let us say, 20,000 rupees salary to an employee, okay, the government says you will have to pay your ESIPF on that count. If you are paying, let us say, anything up to 15,000 rupees, I will pay on your behalf, provided the total number of employees are less than 100 in your company or in your entity, not necessarily a company, in your entity, and at least 90%, that means maximum 90% of them should be drawing, at least 90% of them should be drawing 15,000 rupees salary. They have put two conditions: less than 100 employees and 90% of your employees should be drawing less than 15,000. If both the conditions are complied, the provident fund contribution for 3 months of March, April and May will be provided by the central government. So 12% of the employer, 12% of the employee will be provided by the government of India. So what happens in such a situation? How do I account for it? Accounting is, let us say I'm paying 10,000 rupees as a salary to an employee. So 10,000 rupees when I pay, actually in the normal situation, what I would have done is, to the employee, I deduct 500 rupees. I will pay another 500 rupees from my side, remit 1,000 rupees to the government, and 10,000 rupees plus 500 rupees, my contribution, 10,500 rupees will be a debit to my profit and loss account. And what goes to the employee is 9,500 rupees. What gets credited to the government account is 1,000 rupees. So this is how the accounting happens. Now, when this government is giving me the provident fund contribution, the accounting with respect to debit will not change. So 10,500 will be debited, and the employee gets 10,500 in this context. This 1,000 rupees, 500 rupees of the employee's contribution and 500 rupees of the employer's contribution will be paid by the government. So government, PF department gets 1,000 rupees. I get, in my profit and loss account, I will have to credit 500 rupees, because that 500 rupees which I would have paid is actually being paid by the government. So there will be a debit of 10,500 rupees to my profit and loss account and a credit of 500 rupees per employee on account of PF contribution. The question that came to me was, what is the impact of income tax? Of course, since it is credited, it should be actually normalized. 500 and 10,500 gets normalized. But considering the last year situation, this 500 rupees will be subject to income tax. What about GST? GST, they are very clearly defined in supply that the consideration in the supply will not include any payment which is coming as a subsidy from the government. So therefore, there will be no GST on that. Accounting for investments, accounting standard 13. Investments are going up and down like mad. The value of the investments, I mean. The investments have to be valued or depending on whether it is a current investment or a long-term investment. If it is a current investment, it has to be cost or fair value, whichever is lower. So again, you will get affected because the fair value as on 31st of March was much less. In general, I am talking. And when it comes to long-term investments, the value of the investments have to be reduced if the value reduction is for reason other than temporary. Otherwise, you carry it at cost. In fact, one of our customers, he had invested 25 crores in the month of November, December, around Deepavali, which was when the market was very high. And on 31st of March, he came to me and said, my 25 crores investment today, my portfolio is worth 10 crore rupees. So I have lost 15 crores in a matter of 6 months. So how do I have to account for it? That depends on whether he is carrying it as a trader or is he carrying it as a long-term investment. If it was a trader, I would have definitely taken that as a purchase value as 25 crores and closing stock of inventory of investment at 10 crores. Since it is held as a investment, as a long-term investment, I will have to keep it at 25 crores in my balance sheet unless the decline in the value of the investment is for reasons other than temporary, becomes a highly judgmental issue. 14, 21, 23, 27, not much of impact. When employee benefit, there could be a lot of actuarial valuation changes. Lot of employees, the future remuneration could come down. Employee turnover could become faster. The mortality rate, which was about 71 years in India, could probably come down, because of which there could be a lot of actuarial value changes, and therefore there could be a reduction in the provision for employee, and there could be a credit. I mean, I'm just guesstimating that. Borrowing cost, the impact could be by virtue of suspension of the interest capitalization. One of the points that is told is, whenever an asset is under construction, and the asset takes more than 1 year for it to get completed, it is called as a qualifying asset. Now, in the case of a qualifying asset, what you need to do is the interest, the borrowing cost cannot be expensed out. It has to be added to the cost of construction. And the same standard says, if the construction activity gets suspended for reasons other than temporary or other than normal, then the capitalization also should get suspended. Rather, during that suspended period, you'll have to expense the particular interest expenditure. Now, whether this 40-day lockdown period, or if it is going further beyond, the asset is under construction, the interest has to be suspended. I mean, interest cannot be suspended. The capitalization of interest, whether it should be suspended or should it be expensed, becomes a matter of, in fact, our institute has told, if it can be proven that it is for a shorter period and during this period, we have actually done some technical work and administrative work, you don't have to actually suspend it. Suppose you decide that, no, we did not do any work, then the right thing to do is actually suspend the interest capitalization. Now, if I suspend the interest capitalization and debit it to my profit and loss account, will that debit, let us say 50 lakhs I have paid, 50 lakhs I have paid as interest during the lockdown period on a building which I am under construction, 50 lakhs cannot be capitalized because no work has happened and it was an abnormal situation. So therefore I capitalize it, I expense it out. Will this expense be allowed for income tax purpose? Will it be allowed for income tax purpose? The answer is given by ICDS, read with section 36, which goes on to say any expenditure which you are incurring during the construction period has to be capitalized. There in income tax, there is no question of suspending the interest capitalization. So therefore, for income tax, this 50 lakhs, whatever you have debited to profit and loss account has to be added back to the profit, and at most you can add it back to the capital asset and claim future depreciation. Segment reporting related parties may not be impacted much. Leases for Ind AS, there will be some disturbance. EPS will be a collateral damage. Accounting for taxes on income, deferred taxes will be a big issue. Deferred taxes will be a big issue in the sense we may have to relook into the entire deferred tax liability. The liability, if I had created because of future losses, it could come down. If I have created a deferred tax asset, assuming that there could be a future profit on account of which I will make use of this asset, then that has to be written off, reassessed. So entire deferred tax liability and asset will have to be reworked. Discontinuing operations, there could be disclosures on account of discontinuing operations. Interim financial statement, there could be a big issue during the quarter one financials when you are actually preparing the June quarter. Again, things could go haywire. Provisions, contingent liability and contingent assets, there could be a lot of issues because you may have to provide for onerous contracts and losses arising on account of penalty due to delay in supply of goods. So I have just taken you through what are all. Why did I talk about this? I talk about this just to tell that although the financial year 1920, it was 10 divided by 365 days, the brunt of that, lot of estimations will have to be worked out because of the events occurring after the balance sheet date, on account of various accounting standards which are worked out on a conservative basis. You don't wait for the event to happen, you estimate it and do it. But at the same time, for income tax purposes, the provisions which are made, the estimated losses which we have provided for is not allowed for income tax. That's going to be a double whammy for the business. Is there going to be a issue when it comes to audit? Yes, there will be a lot of challenges. There will be new key audit matters which may have to be reported. There is a separate paragraph called the material uncertainty in relation to going concern. SA 700 last year onwards, when it got changed, we were supposed to build in a paragraph. If at all the going concern is affected, if the going concern is affected, I need to rework my financials accordingly. If the going concern is not affected, but the concern, the uncertainty with respect to that is there, then I'll have to spell out a separate paragraph in the audit report saying that there is a material uncertainty with respect to going concern. However, the management is confident of overcoming that particular situation. On account of reasons have to be specified, giving that particular paragraph. Then there may be a emphasis of matter paragraph explaining the significant uncertainty, arising from the outbreak. Then the qualifications or adverse opinion in respect of inadequate disclosures. We just now saw a lot of accounting standards compliances. If any one of them is not complied with, then I will have no choice but to go in for qualification or adverse opinion. Then what could be the impact of this on my internal financial control reporting? There could be a lot of other challenges in internal financial control reporting. Let me just show you what I mean by that. There could be new risks arising out of COVID and lockdown, on account of which the entire risk and control matrix will undergo a change. I'll have to bring in new risks and therefore new controls. Okay, and I may need to implement new internal controls or modify my existing ones. Especially, let us say, when people are working from home and I am giving the access to them. So is there any loss of data or the loss of confidentiality of the data which is happening? Or can somebody insert a figure which they were not supposed to do? So things like that, I may have to bring in, there could be additional risks because of which I have to bring in additional controls or modify my existing controls. Need to consider effectiveness of the controls. When not only having control, but also having effective controls is the most important thing. And effectiveness may be lost of the existing control because of lack of information, lack of communication, absences. All these things could lead to a deficiency in the effectiveness of the controls, because of which our IFC reporting has to be that much more stronger. And there could be other situations where I have the selection and application of gap for accounting and disclosure issues arising on account of COVID will also have to be looked into. And if existing controls cannot be performed, identify alternative appropriately designed controls. So on 31st of March, I may not have been in a position to do my stock verification or my control verification. So I may have to do alternative procedures to satisfy as an auditor whether those things were actually present. Well, that was beyond my subject. So till now, what I spoke about was nothing to do with the subject that I took about, but setting the entire perspective to the subject which I have taken up for myself. So relief and stimulus measures under the various laws by Government of India. Let me pause here. Captain Nayak, is the going good?
Going very good.
Good. Okay. Thank you so much. So I'll proceed further. Relief and stimulus measures under the various laws by Government of India. Are there any comments which I need to really be worried about? I see some comments saying that PowerPoint is not visible. Is that so? When if it is not visible, not much that I can do at this point in time. All that I can say is I will be sharing this PowerPoint with the branch, and they can in turn upload it in the website. For thereafter you can see that. But one thing I can tell you is more than the PowerPoint, it is the power of the speaker which has to be concentrated on. What do you say, Captain Naik?
Power of the speaker is more than PowerPoint.
Yeah, okay, thank you.
So I don't want to pinpoint for your PowerPoint.
That's nice. Okay. See, one of the problems with a web-based presentation with a webinar is I don't get to see the smile and the feel of the participants. You know, and also the screen which I am having here, I don't even get to see the comments that are thrown out by the viewers. I have an alternative screen wherein I have to tilt my head and see if there are any comments coming out. I see Pannaraj writing very good going. Thank you, sir. I also see Ranganath Shenoy saying accounting standard analysis is too good. So well, that acts as a boost to me to carry on my play for the next 45 minutes. So relief and stimulus measures under the various laws by Government of India. Let me come to income tax. Income tax, what they have done is, because the lockdown got announced on around 20th, let us put it that way, because that's the cutoff that they have taken. The lockdown was exactly from 25th onwards. What they did was, we could not have complied with so many things which we would have done otherwise between 20th of March to 31st of March. So therefore they said, in the due dates in the income tax department, in the Income Tax Act, between 20th of March to 29th of June, even if you do it on 30th of June, will be considered as though it was done on the respective due dates. Now, what does that mean? Let me just tell you. I will read out the provision, then explain it to you. Due dates where time limit is expiring between 20th March 20 to 29th June 2020, extended to 30th June 2020, or such other date after 30th June as may be prescribed by the central government. In fact, there is an 8-page notification. There is an 8-page ordinance. There's just an 8-page ordinance, which all of you can go through at leisure, which is signed by the President of India, which has also given the powers for the government to further extend it beyond 30th June if the situation so prevails. Let us pray that the government does not extend, because what I'm saying is it can happen only if the COVID situation extends. So I don't want both of them to get extended. So due dates. Now, what does that mean? They have given under 3 specific headings. Although like the colorful presentation which I have given here, that may not be seen in this 8-page. It will all be in black and in a simple font. But what I've tried to give in my PowerPoint presentation in a manner that everybody can understand and appreciate or easily assimilate. So issue of notice, intimation, notice, notification, sanction or approval, passing on of order, completion of proceeding by authority. The first point is for the income tax authorities. If, let us say, for issuing a notice, 31st March 2020 was the last date for the income tax department to issue a notice, then if they issued this notice in the normal period on 1st of April, we would have challenged it to say it is a technical mistake. Therefore, this notice is void ab initio. However, what this notice now, because they could not have issued this notice on 31st of March, even if they issue it on 30th of June, it will be considered as a good enough notice. It will not be considered as bad in law. Similarly, for passing an order or completion of any proceedings by the authority, wherever the due date was between 20th March to 29th of June 2020, if they did it on 30th of June, it is considered to be good. The next is filing of appeal, reply, furnishing of return, statements, application, reports, any other documents. Let us say all of us know that the last date for filing any appeal with respect to an assessment order given by the assessing officer, for me to go to the Commissioner of Appeals, 30 days. For me to go from the Commissioner of Appeals to the tribunal, 60 days. So like that, there are dates specified, the last dates specified by which I have to approach to the appeal bodies. Now, if let us say I was given an order by the assessing officer on, let us say, 25th of February, then I should have filed my appeal with the Commissioner of Appeals by 25th of March 2020. Now, since 25th of March is in the lockdown period between 20th March to 29th June, Even if I file this appeal by 30th June, anytime before 30th June, this will not be considered as time barred. So filing of appeal, reply, furnishing of return. This is very interesting. Why I highlighted the word return is ETDS return, which we have to file for. There is no separate date given anywhere else in the Act. By virtue of this, we have to assimilate that the ETDS return for the month of April, for the month of March, for the quarter March, the TDS has to be paid by 30th of April, and by 31st of May, I should have actually filed my ETDS return. But this 31st of May ETDS return has also got now extended to 30th of June because it happens between 20th March to 29th June 2020. Statements, it could be a Form 61 statement or a Form 15H statement. Whatever statement that the assessee has to give between these two dates, even if it is given on 30th of June, it is fine. Similarly, 15H, 15G, which the assessee has to give it to the tax deductor not to make TDS, even if he gives it on, normally he should have given it by 30th of April. 30th of April, since it happens between these two dates, even if he doesn't give it, it is okay if he gives it on 30th June. And the income tax came out with the circular to say the 15H, 15G, which is given by the assessee for the last year, will hold good for this year till 30th of June 2020. So these two makes 15G, 15H delayed by, you can delay it up to 30th of June 2020. Or, very interesting, what is given in blue, any compliance by the taxpayer, including the investments, deposits, payments, construction, or such other action for the benefit. Now, what could be the various compliances? And they have actually specified in the ordinance what are the compliances. They have said that anything which you have to do under Chapter 6A Part B, deduction in respect of certain payments like 80C, 80D, 80G, up to 30th June can be claimed for deduction in the financial year 1920. So since 31st of March, I had time to do, and it was closed down. And if I'm doing it by 30th of June, I can take all the LIC benefits, LIC payments which I did, Mediclaim insurance payment which I did, the donations which I made up to 30th June, I can take the benefit of that on in the financial year 1920, very specifically told. Similarly, investments, constructions, purchase made up to 30th June for claiming rollover benefit in respect of capital gains under section 54 to 54 GB shall be eligible for claiming deduction from, so we know, for example, 54. If I sell a residential property and purchase another residential property, I don't have to pay capital gains. But the time limit for purchasing the new residential property is 2 years from the date of the sale of the property. If it was construction, 3 years. So if this 2 years and 3 years ended anytime between 20th March to 29th June, it is okay. Even if I had delayed it up to 30th June, it will be considered as a good enough compliance for claiming the 50G, 54 benefit. Commencement date of operation for SEZ units, claiming deduction under section 10AA extended to 30th of June. This is for SEZ. I'm not going to talk about that in detail. But this particular ordinance has not only extended these 3 bullet points with respect to income tax, but also with respect to Wealth Tax Act, Prohibition of Benami Property Transaction Act, Black Money Act, Security Transaction Act, the Commodity Transaction Tax Laws, Equalization Levy, and the Vivad Se Vishwas Law. And Vivad Se Vishwas I will talk a bit later on. But two important things I would like to highlight here for the benefit of all the chartered accountants are, one is this benefit. Suppose I bought a car or a machinery worth 5 crores in the month of June. In the month of June, if I bought it, or in the month of May, can I get the depreciation for financial year 1920? The answer is no, because that is covered under section 32, and section 32 has not been, because when they have said that including investment, deposit, payment, construction, or such other action for the benefit under Income Tax Act, then they have specified what those things are. It's only a compliance by the taxpayer, including investments. And when it came to investment, they have talked about only section 80 part B investments and 54 to 54 GB. They have not included 32B, 32. So any capital asset acquired subsequent to 1st of April will not be eligible for depreciation in the previous year. The second issue which could come out is the second issue which could come out is about, let us say I have to buy a stamp paper on 1st of April to do a new partnership deed, or I have already had a partnership firm and I want to increase the remuneration from 1st of April. Section 40B5 goes on to say remuneration prospective from the date of agreement, from the date of partnership deed can be given. Now, I would have given it from 1st of April. The remuneration, enhanced remuneration, I would have given it from 1st of April. But 1st of April, I could not have bought the stamp paper. So I bought the stamp paper after the lockdown, let us say 4th of May. And said that 4th of May I bought it, but I said that the remuneration is effective from 1st of April. Remuneration is effective from 1st of April. Will it be allowed for income tax? That could become a matter of litigation unless there is an FAQ. Although the courts may, I'm sure of arguing for it, has to take a liberal view. Because I was not able to go out and buy the stamp paper, I was not able to do it from 1st of April. Please, therefore, considering the extraordinary situation, permit me to claim this particular benefit is what I would argue. So next point, donation made to PM CARES Fund, eligible for 100% deduction under Section 80G without limit on deduction of 10% gross income. So there is a new fund which is created by the Prime Minister's office called the Prime Minister's CARES Fund. Our institute, and I am told Mangaluru branch also has donated a lot of funds. And I was seeing Gautam Pai. Gautam Pai's YouTube where he was very passionately requesting and also declaring that Mangaluru branch has also sent a lot of money, and our president of the institute has also made about a promise of about 21 crores to the Prime Minister's CARES Fund. He has already contributed 15 crores out of which from the members itself. So that's a great job, Gautam and Captain Nayak from Mangaluru branch, and we're proud of the institute for taking the cudgels on behalf of the members and taking it forward. Coming back to the subject, PM CARES Fund, whatever you contribute is eligible for 80G without the sublimit of 10%. Normally, there is a sublimit of 10% of your gross income. So the transaction on all 80G is actual money, 100% or 50% as the case may be. Further, there is a second ceiling of 10% of the gross income. So for this particular payment of PM CARES Fund, also true for Prime Minister's National Relief Fund, this sublimit of 10% is not applicable. Even if you contribute in the month of May, June, you can still claim it in the financial year 19-20. A very interesting point to be noted is talking about companies which want to avail this 15% and 22% rate, that is coming under 115 BAA or BAB. For them, this Finance Act 2020 has shut the door for all 80 deductions. Until last year, they could have claimed deductions under Part B of Chapter 6A. But from financial year 2021 onwards, those companies which want to claim 15% or 22% rate cannot claim any Section 80 benefit. However, since we are talking about these companies, if they are making now, the benefit is given in last year, so they can give the donation now and claim it in 19-20, and definitely they cannot claim it from this year onwards. Let's talk about Vivad Se Vishwas scheme. What is the scheme? Announced in Budget 2020, wherein a wonderful exchange offer happened between the tax litigant and the government. They said that the tax litigant, if you withdraw the appeal and pay me 100% of the disputed taxes, I will, from the government side, I will waive all the penalties, all the interest and prosecutions, if any. So wherever the assessee felt that he was on a weaker wicket, wherever he was on a weaker wicket, this was an added incentive. Because if I just pay the taxes, even if it is a tax pertaining to 20 years ago, higher the number of years under dispute, better it is for them, because you don't have to pay 20 years interest. Now, if you withdraw the appeal, you will be eligible for no interest, no penalty, and no prosecution. The only condition that was told is this litigation, this should be, an appeal should have been pending with any authority as on 31st of January 2020, or the time limit for filing the appeal should not have should have been available beyond 31st of January 2020. So where an appeal is filed up to 31st January 2020 is fine. If you had time limit to file, the order was passed, but the time you have not filed an appeal, and the appeal was, you had time to file the appeal as on 31st of March 2020, even those cases are eligible for coming under Vivad Se Vishwas scheme. Now, what they initially told was, this scheme, from the budget date to 31st of March, if you pay 100% of the disputed tax. Beyond that date, you have to pay 110% of the disputed tax. Now, what they have now done is, because of this particular situation, they have not enhanced the 10% extra tax. They said 100% of the disputed tax you pay, and I will not ask you to pay any penalties. Similarly, there were certain different slabs, which I will not talk about in detail today, because I'm not talking about Vivad Se Vishwas today. The differential taxes were there even for such cases, disputed taxes between March and after March situation. Now, all of them have been simplified under one slab. That is 100% of the disputed tax in normal situation, 125% of the disputed tax in case of assessments done for such cases. And in case it is a disputed penalty or interest or fee, 25% only has to be paid. Okay. So we have already seen, for filing a belated return, for filing a belated return, the last date for financial year 18-19 was 31st of March 2020. So by virtue of the ordinance, it has got extended to 30th of June. So even if you want to file a revised return with respect to a return which you have already filed, the last date of 31st of March has got extended to 30th of June 2020. So now the next point is very interesting. If there are any taxes payable, if there are any papers to be filed, exchanged, for that due date is got extended without any cost. However, if there is any tax to be paid by the assessee, is there a deferment of payment of taxes? The answer is no. Whatever taxes has to be paid between 20th of March and 29th of June, please note, even if you are under a lockdown, you shall pay. I mean, you look at the viparyas of this. Chartered accountants had to pay, let us say my chartered accountants, all the SSCs had to pay whatever 31st of March salaries that they have to pay, they must have paid it. And whatever provisions that I have done on 31st of March, they have time normally for up to 7th of next month, they have to make the TDS. But for March month, there is always a provision for 1 month. So by 30th of April, I should have actually paid the TDS. Now, 30th of April, I am under lockdown. How do I pay? I can't pay. I mean, I can't go to the office. In spite of your not going to the office, in spite of your not being able to pay, the government has not waived the or deferred the payment. What they said is, in case you delay the payment, you shall pay a subsidized interest. Instead of paying 12% interest per annum, you shall pay 9% interest. I mean, there is only a 3% reduction there. So for TDS. Similarly, if you are to pay for a belated return, we said that belated return filing has got extended. But when you had to pay file the belated return, if you had to pay any self-assessment tax, or if you had to pay any advance tax for the financial year 1920, or if you had to pay any other regular tax and assessed tax which you had to pay, you should have paid it on the due date as originally given. There is no extension of the due date. However, what they said is, we will charge you a reduced rate of interest at the rate of 9%. So reduced rate of interest at 9% instead of 12 or 18% for non-payment of income tax or levy, wherever advance tax, self-assessment tax, regular tax, TDS, TCS, equalization levy, security transaction tax and CTT due for payment between these two dates if they are paid by 30th of June 2020. No penalty. The best thing that they told is, no penalty or prosecution shall be initiated for these non-payments. Aadhaar linking, they have been continuously extending. Anyway, the last date was 31st of March. It is now extended to 30th of June. 15G, 15H, I have already told you. When it comes to a certificate for lower TDS, all of us know, if an assessee's TDS is being done at 10%, and if the assessee feels that 10% is going to be a big burden for him because he's otherwise not paying taxes, or he's paying very little taxes, he can approach the TDS officer by filing a form number 13, requesting him to direct the deductor not to make TDS or to make a lesser TDS. So what we call it as issue of certificate for lower tax or nil deduction of TDS under section 197. So or 195 if it is an international payment, or if it is 206C if it is a TCS cases. So in all these cases, normally we would apply for this lower deduction or nil deduction around the year end. We can start making it from end of February and March and April. These are the time around which we do, and this is under the lockdown. So what they have done is they have given 4 different scenarios. What are the 4 different scenarios? Who has filed application? If the assessee has already made an application for lower or nil deduction for 2021, and he had already been issued such certificate for last year. So he has made an application for this year, and he has already issued a certificate. I mean, he has already got a certificate for lower deduction for a particular assessee last year. Then that certificate will be valid till 30th of June 2020. So that is what is told. Or till disposal of the application by the assessing officer, whichever is earlier. If the assessing officer disposes it earlier than 30th of June, I'm told that from yesterday onwards, the income tax officers have started coming to the offices in Bangalore at least. So if they start issuing the thing, then that certificate will be revalidated. The second situation is who could not apply for issue of lower or nil deduction. I have not made an application, but last year I had a certificate for lower deduction for a particular assessee. Then the situation is that certificate will be valid till 30th of June 2020 for 2021. But I will have to immediately make an application in form number 13 via a email. The third situation is who has not applied for issue of lower or nil deduction of TDS or TCS. I have not made an application and I don't have a last year certificate. Then the only way is you have to make an application on email at the earliest and wait for the officer to give you a certificate. The fourth situation is on payment to non-residents, including foreign companies having permanent establishment in India and not covered by 1 and 2. For such situations, they said TDS made at 10%, including surcharge and cess. Two issues which could arise on account of this. Is if the certificate was given last year. Normally the certificates are conditionally also given. They say that you need not do TDS up to 1 crore payment. After that, you have to make it 10%. If that was given for last year, the answer that is given now is that 1 crore, what was available as a ceiling last year, will be afresh available up to June. That is what is the first thing. The second thing, they also say that the payments, the second condition could be the payments which you are making, the TDS need not be done for 4 months, first 4 months. That could be or between these 2 periods, you don't have to do. That is how these certificates could be given. So now they said that this, if it is a conditional certificate like that, periodically, they have told now in the circular that up to 30th June, even if it is for 2 months, 3 months, 3.5 months in 1920, you can consider that as valid up to 30th June for the current financial year. So that is a change that they are told. So ordinance will come into effect. So due dates I've already explained, but one very important point, I mean, this is a table which encapsulates the entire circular into a very beautiful format. TDS, TCS payments, month period, original due date, revised due date, no change. 9% up to 30th June, 18% thereafter. So please be aware that when it comes to TDS on the interest application is very funny. 9%. Let us say instead of paying it on 30th of April, for the month of March, I made the deduction on 31st of March. Salary I paid or some provision I made 31st of March, and the due date for payment was 30th of April. And instead of paying it on 30th of April, I paid it, let us say, on 1st of May, or let us say 4th of May, when the lockdown got opened up. You know, this 9% interest will be applicable for the month of March, April, and May. Very, very funny. So for a delay of 4 days, instead of 4 days interest, the interest on TDS will be from the date of deduction and not from the due date of payment. A very important point to be noted. Form 15G, 15H, TCS, TDS, all the returns got extended for that. And the last point, which I put it in yellow, is revised ITR forms. ITR forms for 2021 assessment year was already made available, but to incorporate these changes, they have actually going to revise it, and they have told that that will be made available by 31st of May 2020. I mean, this goes on to say that probably the July and September due dates will also be accordingly extended. Let's not anyway worry about that for the moment. CBDT considering extending date for personal filing of ITR from July 31st to September 31st was what was told by a senior CBDT official as reported in Indian Express. So that gets me to the end of income tax. I am now moving to GST. Is the going good, Gautam Pai?
Going very good.
Thank you, Captain Naik. Okay, now GST relief. GST is better than income tax in a way. Income tax, there has been no deferment with respect to payment. GST, they have given a relief for deferment, at least in the case of those entities where the turnover is less than 5 crores in the preceding previous year. So let me just straight away go into the payment, because all of us know that GST we'll have to file 2 returns every month. One is R1, one is 3B. R1 is only a return which I file by stating what was my turnover in the last month. Okay, so R3B is a return which goes along with the payment. So I am worried about 3B more than R1. Of course, R1 fixes me. 3B is what I will have to go by the fixation. So 3B, let us finish off 3B first, because that is the return which I actually file along with the check. So what they said is, if check whether your turnover in the preceding year was more than 5 crores. If the answer is yes, there is no extension of due date. You shall pay it on the due date of 20th of the next month. For the month of February, you should have paid it by 20th of March. For the month of March, you should have paid it by 20th of April, and April by 20th of May. However, instead of charging 18% interest, I will charge you 9%, just like income tax, TDS, or self-assessment tax. Having said that, there was also a late fee at the rate of 100 rupees per return, 50 rupees going to Narendra Modi and 50 rupees going to Yediyurappa. That means center and state in that manner per day. So that they told that we will not charge you even if you have not filed, even if there is a delay in filing the return. So there is no late fee till 30th of June. Whatever reduced interest up to 24th of June 2020. Late fee will not be applicable till 30th of June. Now, if your turnover were to be 1.5 crores to 5 crores or less than 1.5 crores, there they have given you a deferment of payment of, whatever your GST you have collected, you just have to keep it with you safely, because you definitely have to pay it. But instead of paying it on the respective 22nd of the next month, you shall pay it for the month of February and March between 1.5 crores to 5 crores 29. So let me put it in short. It is last week of July. Around the last week of July, I will have to pay it depending on which month and what is my turnover category. But for the month of May, the interest rate will go back to 18% per month. Let's come to R1. When it comes to R1, all of the assessees have been classified into only 2 slabs, more than 1.5 crores, less than 1.5 crores. Less than 1.5 crores have to file it quarterly, more than 1.5 crores have to file it monthly. Within 11th of the next month is what I have to pay. Now, having told that, they said that you shall file it on that date. There is no extension of the due date. However, the late filing fee of 20 rupees per day per return, that is 20 rupees into 2, 40 rupees per day per GST form, will not be payable till 30th of June. Will not be payable till 30th of June. So effectively, R1 due date has also got extended to 30th June. That means if it is possible, I would suggest please file and finish it off instead of ganging it up and making all the jamming the system around the last week of 30th of June. But a very interesting and an important catch which has to be taken is the late fee and interest, whatever they have told, I have given it in the red below. If the above filings are not made within the relaxed due dates, then the late fee and interest at 18% would apply from the original due date. So that is an important catch. So if you delay, instead of filing it on 30th of June, you file it on 1st of July, you file either the R1 or R3B instead of on the particular date, you file it one day later, then you will be ending up paying this for, let us say, month of March. 11th of April, you should have filed this. From 11th of April till 1st of July, for how many number of days? For so many number of days, you will be ending up paying 40 rupees per return. So please ensure that you pay it within 30th of, within the effective due dates. Another interesting point, which all of us know, is with respect to restriction of input tax credit. Whatever be the input tax credit in your books of accounts, I don't care. Whatever input tax reflected in the 2A, Form 2A, beyond that, I will allow a 10% variance. That means if I have in my books input tax credit of about 3 crores, but in the books, in Form 2A, I have only 1 crore. I can not claim 3 crores as an input tax credit for the month. I can claim only 1 crore and 10 lakhs. So this is the rule as it stands. However, this rule of restricting input tax credit to the extent of 100, how does this 10% come into picture? By virtue of, I will get this 1 crore by virtue of my supplier who has collected the payment, filing his R1. The moment he files his R1, that comes and sits in my R2A. Now, because he is being given time to file his R1 on a delayed basis, and since I have to make my payment on a monthly basis now, assuming that I'm more than 5 crores, this would not have got updated because he is not filing. So therefore, they have relaxed the rule of 110% for the month of February, March, April, May, June, July, and August. For these months, they have extended. However, it is going to come back to you. If you have a very bad supplier who has actually not filed it beyond, then that would go and haunt you in the month of September. The correction will have to definitely be made. So please note this. So let me go back. So last date for 3B has got extended. Interest we have already discussed. Date for opting for composition scheme extended till 30th of last week of June. Normal time by which I have to opt for composition scheme. Who are the ones who can come in for composition scheme? Whoever the supplier of goods with a turnover of up to 1.5 crores can come in for a composition scheme, wherein he just has to pay 1% of the turnover without collecting it, of course, from the customer. And if I were to be a supplier of services, from 1st of April, I have been given this benefit where they said, if I'm a supplier of services up to 50 lakhs and my turnover is up to 50 lakhs in the year, I have to pay 6% of that turnover as the GST instead of 18%. And the second cap is I cannot collect it from the customer. I have to pay it out of my own pocket. So the other person also will not get the input tax credit. So the extension of the option for coming to composition, the last date was 30th of April. It got extended to up to 30th of June. I can file this return. 99C for 18-19 got extended to the last week of June 2020. Now payment date to avail Sabka Vishwas scheme. I mean, this scheme, all of us know, has already got expired on 15th of January 2020. But if a declarant has already made an application which is pending for approval, and the last date for payment was still made available till 31st of March, the payment date could have been done. So since that fell between 20th March to 29th of June, even if you make the payment on 30th June for Sabka Vishwas scheme which has already got, which has already got approved by the department, I don't have the extended time to now go and surrender, but already surrendered. For making the payment, 30th June is the last date. They've also given me a benefit for e-way bill. E-way bill generated during the lockdown period, that is 20th March to 15th of April. I'm sure they will extend this further if the vehicles are not in a position to move. Though the validity dates of those e-way bill has got deemed to have been extended till 30th of April. Surely this will further get extended. Corporate entities. I mean, this is a very interesting point which I just put up this morning, which I got to know that earlier individuals and firms were allowed to file their R1 and 3B using an EVC, that is a OTP on a mobile and a email. We could have filed that without the DSC. Corporate entities were not allowed. So now from this, I think a couple of days ago, they have introduced this concept because the corporate entities also can now file 3B without DSC by using EVC. After all, what the government wants is the money. It is not the DSC and EVC, but the point is the right person should file. So therefore, an OTP comes on the mobile of the registered user. So all the due dates with respect to GST, just like income tax, if it is falling between these two dates. So mark the dates in your calendar from 20th March to 29th of June. It is deemed to have been, even if it is on 30th of June, it is considered to be a good enough compliances. They have amended the GST Act to include a concept of force majeure. Wherever force majeure happens on account of an epidemic, the government has taken the powers to change the due dates when you doesn't have to go back to change the act. Press note dated 8th of April 2020, with immediate effect, government to release all pending GST and custom refunds, pending IT refunds up to rupees 5 lakhs. Good news that is. That gets me to the end of GST. I have banking and company law, which I should be able to complete in the next 15 minutes. Is that okay, moderator?
Yes, sir.
Shall I proceed?
Yes, sir. Yes, sir.
So customs and indirect taxes, I mean, not much of it is available now, but wherever, I mean, of course, customs is there, but they said that even in customs, the due dates have got extended. Central excise returns, wherever they had to be filed, that also due dates got extended, and customs is going to work for 24/7 to clear till 30th of June. That's what they have told. Financial services, whenever I use the ATM of another bank, I am a State Bank of India holder, I go to HDFC Bank to draw money, HDFC charges me a bank charge because I have used their facility. So that they said will be waived for the next 3 months. Similarly, if I am having a balance which is lower than the minimum balance, let us say for a current account 10,000 rupees and for an SB account 5,000 rupees in State Bank of India, so that minimum balance fee will not be charged by the banks, is what the Reserve Bank of India has dictated to the banks. Reduced bank charges for various transactions. This is what banking relief, which Captain Nayak was talking about. Banking relief in terms of reduced rate of interest to the end user. Now, if the banks have to pass a relief to the end borrower, the relief has to be provided to the intermediate, which is actually the bank itself. So the repo rate, if it gets reduced, what is a repo rate? Repo rate has got reduced from 5.15% to 4.4%. What does that mean? It means that if a bank is borrowing from Reserve Bank of India, Reserve Bank of India will be charging 4.4% instead of 5.15%. So the banks will, in case the banks are having a deficit of funds, they can borrow it at a lesser rate and in turn give it to the borrower at a lesser rate. Why did you remove the PowerPoint? I don't see the PowerPoint coming on the screen. It's just me. Okay. Reverse repo rate reduced by 0.9% initially. And in the second tranche, they reduced it further by 0.25%. So today, the reverse repo rate stands at 3.75%. What is the reverse repo rate? If the banks have surplus liquidity, if they go and park it to Reserve Bank of India, initially they were getting 4.9%. Now they are getting a lesser rate of interest at 3.75%. Therefore, making it less attractive to the bank to give it to Reserve Bank of India and making it more attractive to give it to the end user. Unfortunately, instead of making it, although it is made less attractive, today the banks have got so much of liquidity and the borrowers are not coming in to borrow, maybe because of lockdown. I could see that Captain Nayak has actually written to the district minister. He sent me a message asking for opening up of at least the Chartered Accountant's office, because we could act as an intermediary between the borrower and the banker and make an application for getting the additional funds. Now, for the moment, the banks are still having surplus funds and they're at least getting 3.75%. In fact, what representation we have made is for the next 6 months, the banks should not get any interest from Reserve Bank of India. You should make it zero so that they are forced to lend it to the borrower. I don't know how you will take it, Captain Nayak. Let's discuss that separately. Measures to expand liquidity. Banks have got a lot of measures. I would not like to get into the details. I know that for sure because I was sitting on the bank's board, that we have certain various operations to enhance the liquidity of in the entire system. We call it as a TLTRO, the reduction of CRR, the increase of marginal standing facility. By virtue of all these means, there would be surplus funds in the market, refinancing facilities for all India financial institutions, by virtue of which 4.74 lakh crores is available in the banking system, by virtue of which additional funds can be lent to the borrower. What is very important for us as chartered accountants is the regulation and supervision. Any term loan given by a bank or an NBFC or a financial institution can automatically stand deferred by 3 months. Initially, there was a question whether I should make an application to the bank, I should request the bank. But later on, Reserve Bank of India came out with an instruction on 6th of April where they said moratorium must be a default option to all the borrowers. It should not be as though they come and ask you. You should by default give that as an option. And in case they want to repay, they can come and repay. To that extent, strictures have been given to the bank. So they have told that any term loan, although the repayment is there for April, March, 3 months from 1st of March, if it is a standard account, then you will have to provide a 3 months moratorium for the month of March, April, and May. I think it is for April, May, and June. So you will have to defer it for 3 months. In case they want to pay, please take it. But what is my advice to the borrowers? And I'm sure advice which is sought by you also, you can give the same advice to all the borrowers is, in case they have money, please ask them to pay it, because this is only a moratorium and it is not an interest-free period. So by availing a moratorium of 3 months upfront, at the tail end, at the time of closure of the loan, they may have to pay 4 months extra. Or if it is for a larger period, it could be for 6 months or 7 months extra EMIs they have to pay at the tail end. So please ensure that if you have liquidity, please pay it. If you have definite liquidity problems, please make use of this particular facility. Interest on working capital facility as on 1st of March 2020 permitted to be deferred by 3 months. So this is what also, if your interest, if your account is 10 crores and your sanction is also 10 crores, and on 31st of March they apply interest, let us say 10 lakh rupees interest, so account becomes 10 crore and 10 lakhs. So from next day they will not pass your check. They will not pass your check because they will say it is excess drawn on that day. So therefore what happens is, they have now told that 3 years interest, they will park it in a separate account, and your drawing power, your drawing will not be restricted because of the account becoming excess drawing by virtue of charging 3 months interest. The third point is, lending institution allowed to recalculate drawing power by reducing the margins and or by reassessing working capital cycle for the borrowers. A very good possibility there. They said normally we say 25% margin for stocks, 33% for receivables. The Reserve Bank of India has not told how much margins they have to fix. They only said that in this tough times, please reduce their margins and recalculate their drawing power so that they can have a higher liquidity with them to face the situation. Similarly, also reassess their working capital cycle. If in case they want to have a cover period of 3 months or 6 months because of delayed payments by their customers, please allow them, is what is told by Reserve Bank of India. And finally, what is most important is, this 3 months moratorium or 3 months deferment will not lead to the account being classified as a NPA, and it will also not affect the credit rating of the borrower. And on 17th of April, when the Reserve Bank of India Governor Shaktikant Das came, he told one very important thing, that this lockdown period of moratorium period and deferment period of 3 months, this 90 days NPA excludes the 90 days period. So which means almost 180 days will be available for the asset to be classified as NPA when we are doing the bank audits. We will get into that. So, but there is one condition which is told, that 10% additional provision for such accounts spread over 2 quarters. So this is a additional provisioning requirement for all those cases where they have taken this 90 days extra cushioning. Now also, when it talks about export proceeds, FEMA rule tells that I should get the export proceeds within 9 months from the date of export. So now, considering this extraordinary situation, they said that even if it is coming within 15 months, another additional 6 months has been provided. Within 15 months, if it is coming from the date of export date, it will not be considered as a bad FEMA compliance. Insolvency and bankruptcy code gets me to the end of banking. Moving to the next leg of corporate laws, insolvency and bankruptcy code. On account of large-scale economic distress caused by COVID-19, see, in insolvency bankruptcy code, there was a very interesting thing that if some company is not paying me 1 lakh, I being a financial creditor or as an operational creditor, I can write to the insolvency board asking for, either the company to pay or you take up the company for insolvency. So the trigger for insolvency default, the threshold default to trigger insolvency, what was 1 lakh has been upped to 1 crore as of now. So they have made an amendment in section 4 to that extent. Now they've also told, this is not done, this what is given in orange there is ordinance may be passed to suspend the fresh insolvency action against the companies for 6 months by the financial creditor, operational creditor, or the corporate creditor. The entire insolvency proceedings itself, if it is not initiated, will be suspended for 6 months because of the extraordinary situation. Otherwise, lot of concerns, the going concern could get doubly impacted. Fantastic thing which has happened to protect the elephant from the dragon was the change in the FDI rules. Change in the FDI rules to protect India from the opportunistic takeover from China. They did not tell like that. They said that government of India for the moment had a restriction from any money coming from Bangladesh and Pakistan. There is something called the automatic route and the approval route. Now for certain sectors, the approval route has to be told for defense, etc. That's a different issue. But for automatic sectors coming from any country except Bangladesh and Pakistan, it was considered to be automatic. Now they said, if it is coming from any of the bordering nations of our country, in fact, there are 7 bordering nations of India. I mean, I did not know that. I thought there were only 6. In fact, afterwards, I got to know that Afghanistan also we are sharing a border extending to China, Nepal, Myanmar, earlier Burma, Bhutan, Afghanistan, Bangladesh, and Pakistan, of course. So these 7 countries, if any of the investment is coming into India, it cannot be under the automatic route. It has to be under the approval route. And it is not only the direct investments coming from these countries, it could be an indirect investment. Let us say China is investing in Australia and an Australian company is investing in India. So what we are interested is not the immediate company, but the ultimate beneficial owner. If it is from any of these 7 countries, we want our country to be protected. So therefore, the FDI rules have made it tough for these 7 countries' investment to flow into India. While it could be looking like as a bad news for some of the Indian companies which were on the verge of shaking hands with the Chinese investors, it is actually going to protect them in the long run. Otherwise, they would have probably sold themselves cheap. Maybe India doesn't want us to be sold cheap. So we want to not only have a social distance, we also want to have an economic distance with our immediate neighboring threatening countries. So next I come to the next point called 545 question and answers, which means I will have to shut down on my Companies Act. I will just complete Companies Act and then Captain, can I?
Yes, sir.
What do you want me to do, sir?
Companies Act, another 10 minutes.
I will quickly complete. I wish time stands still for some time, but then time does not wait for anybody. More so for me and you. Okay.
We can extend for 10 minutes. 10 minutes.
Yeah, we can extend for 10 minutes. Let me try to finish up. No additional, very interesting scheme introduced by the Companies Act called the Companies Fresh Start Scheme. What does the scheme say? That any company having any return which is not filed since inception to date, there is no opening date. Now, since inception, like income tax says 20th March to 29th of June. This 20th March, if your company was incorporated in 1956, and if you have not filed any return, you can still file it provided the company has been is not struck off. Okay, so any return which has not been filed, you can come under this particular scheme. So permits filing all pending returns with effect from, and the scheme has already started from 1st April 2020. It is going to end by 30th of September. Applicable both to public companies and private limited companies. No additional fee, only the regular filing fee will have to be filed. And immunity will be provided from any punitive action for not filing the form. There could be certain non-compliances. The popular example which I always take is a company whose paid up capital is more than 10 crores has to appoint a full-time company secretary. Now, and having appointed the company secretary, it should also file a DIR 12. Now, there are two issues here. Appointing the company secretary is one issue. Filing the DIR 12 is another issue. If the company was supposed to appoint the company secretary 4 years ago, and it has appointed him just 1 year ago, and forgotten to file the DIR 12, now he can file the DIR 12 for this last 1 year. Instead of paying additional filing fee, you can file now and not pay the additional filing fee for the delayed 12 months period. However, the penalty for not appointing the company secretary for the first 3 years, instead of appointing him 4 years ago, you appointed him 1 year ago, for not having the company secretary for the last 3 years or last 4 years, that penalty will not be waived. So penalty with respect to compliance will not be waived. Penalty with respect to filing or additional filing fee will be waived. You can file any form except two important forms. One is the form for increase in authorized share capital and the charge related documents. These two forms cannot be filed. And any of the forms which require condonation before filing, we'll have to first obtain the condonation permission from the registrar or the RD, and then we can file it without the ROC. And if the firm has already been struck off or in the final notice has been provided by the ROC under section 248, or the company has already been considered as a dormant company, a vanishing company, or a company which has got amalgamated under any other scheme, these forms cannot be filed under the CFSS form. Otherwise, every form can be filed, including, bottom I have given, including the DIR 3 KYC for DIN marked deactivated directors. Whenever a DIR 3 KYC has to be filed every year, if you don't file it by that particular date, you can file it by paying 5,000 rupees additional. So this particular thing, if no 5,000 rupees, you just go and file it now without any charges, it can be filed. Similarly, a company which had to file INC 22A without any filing fee, you can file it even if it is considered as an active non-compliant company. You can go and file it and make it a active compliant company. So companies can also file for additional applying simultaneously for getting themselves declared as dormant company and striking off under this. So this is a golden one-time scheme, and this scheme is not only to take care of the COVID non-filing, but goes much before. In fact, I would say 1918 there was a pandemic, I was told. In fact, on a lighter vein, today's pandemic is actually webinars only are trying to be the new pandemic. That is the everyday lot of webinars happening. That itself is a new pandemic. Having said that, even if you're not filed, not on account of the corona situation, but much before, you can file all your forms and get rid of it. Caro 2020. Nayakre, it was so unfortunate that I came and spent 3 hours with you explaining Caro 2020 on 13th of March, but all of that
2020.
All of that proved futile. For a moment, because we could have done something else instead on that particular day. On that day, we did not know this. So they said that you deal with one virus in a year. So either you face COVID-19 or Caro 20. So they said now you are facing Caro COVID-19. So Caro 20 has been deferred by 1 more year. It is not removed altogether. It is only deferred. If it were not to be deferred, my goodness, how we would have answered this question, this particular question, whether a company is capable of meeting its liability existing at the balance sheet date as and when they fall due within a period of 1 year from the balance sheet date. This would have been the toughest answer for me to answer if it were to be there at this point in time. PM Cares Fund is also considered, any donation to PM's Care Fund is considered under CSR. Now CSR, I wish I could have spent more time, but then one point I have to say is the Companies Amendment Act 2020 Still not made. It is in the form of a bill, Companies Amendment Bill 2020. Anytime it will be made into an act. What they have told there is, if you have spent anything surplus more than what has been told, instead of spending 2%, let us say 2% comes to 2 crores, and this year you made a contribution of 5 crores. Okay, if you have made a contribution of 5 crores, the surplus 3 crores you can carry forward it to the next year. Now you may say, should I actually spend every year? The answer is given in section 135. For the moment, if you don't spend, you will have to just report. But once the penal provisions which are told in 135 gets activated, what is told is, for the moment it is not notified. They say that once that portion in 135 bracket 5 and 6 gets notified, the unspent amount of whatever you are supposed to spend has to be transferred to a government fund like an IEPF fund. Suppose I was supposed to spend 2 crores. I have spent only 50 lakhs. Then 1.5 crores I have to, within 6 months from the end of the year, unless I have a ongoing project, within 6 months from the end of the year, I have to transfer it to a government notified fund. Okay, so that is still not activated. Once that gets activated, I'm sure that will get activated in the next 3-4 months once the lockdown gets open. Once that happens, what they have told is, you don't have to, now you decide that you spend it or you surplus spend it. You have sent it in surplus means you can carry it forward for the next year. It's also available for ATG deduction, we have already told. Company incorporated afresh. Within 6 months, you have to file one. You have to collect all your capital, promised capital, and file a form 1 INC 20A within 6 months. They have given additional 180 days to file this. Deposits and debentures, whoever have taken, they have been given additional time to comply with the provisions with respect to deposit reserve creation. There have been certain relaxations with respect to board meetings. Now, every company has to have 4 board meetings in a financial year, and these 4 board meetings have to be, the gap between the 2 board meetings should not be more than 120 days. Now, because of this extraordinary situation, they have given an additional 60 days gap between the 2 board meetings. So the the maximum gap between the 2 board meetings till 30th September can be 180 days instead of 120 days. There were certain board meetings which required physical presence of all the directors. Provision for video conferencing board meeting was always there inside the Companies Act. But with respect to these 5 items, that is approval of financial statements, approval of board report, approval of prospectus, approval of financial statements, or approval of M&As, this had to be happening only when in the presence of the physical presence of all the directors. All the directors, the quorum of the directors. So this they have relaxed to say from 19th of March to 30th of June, that is during the lockdown period and slightly thereafter when social distancing has to be maintained, they have told that you can do approve these matters also through a video conferencing. The 182 days for one director, at least one director should be in India, that rule has been relaxed for financial year 1920. There was some relaxation for independent directors. EGMs can also be held through, very interestingly, EGMs can also be held through video conferencing. In fact, one of the companies I know, Suzlon, had already conducted an EGM on a Zoom meeting. So where the voting and all happened on electronic mode. For special relaxations have also been given for companies whose year ending is on 31st of December. Relaxation for the AGM dates have been provided. This is extension of time for names reserved and for resubmissions. So whosoever they have applied for the name clearance and the dates have got were to expire between 15th of March and 3rd of May, they have given additional dates both for name reservation and for resubmissions. Professional tax, ESI and PF contributions, I'm sure all of you know by now, have been given a relaxation for the month of March, February and March. So professional tax, March due date was 20th April. Now the revised due date is 20th of May. Professional tax, yearly payment for employer, my own firm, your firm. The last date we should have filed it by 30th of April. Now it is extended to 30th of May. ESI contribution, February 2020 and March 2020. Instead of 15th March, 15th April, it will now be 15th of May. PF contribution got extended from 15th of April to 15th of May. Talking about Provident Fund, talking about provident fund, we have already spoken about this. Less than 100 employees, and out of which 90% of them should be drawing less than 15,000 rupees, government will contribute. So since I've already mentioned, we just have to file the ECR channel and pay, the employer has to pay for those 10% employees who are drawing more than 15,000, they have to pay. And they also have to pay the EDLI and administrative charges. And then immediately the government will credit the balance portion due of 24%. So it is considered as a subsidy and payment happens accordingly. One more topic I am supposed to talk is on labor laws. I may be allowed to skip on that. All that I can say is labor laws, whether to pay salary, yes or not, is a highly legal, highly debatable issue. In fact, I can only tell you that there are 4 angles to it. One is the legal angle, the moral angle, the business angle, and the goodwill angle. The legally speaking, should I pay or not? I think the government, although has given as a advisory initially, under the Epidemics Act, they said that you shall give it. Okay, so that applies legally. They are saying that yes, it is. It has to be paid. A lot of companies have challenged before the Supreme Court also to say that this cannot be imposed on me. Now, talking about the moral obligation, I would only say if the employee is up to 10,000 rupees or 15,000 rupees, please pay him in full. Beyond that, you can negotiate. You can have a understanding with the employee to say that you sacrifice, I sacrifice, and things like that. And on a goodwill basis, at least for the chartered accountants and things like that, I can only tell that it is better that we pay and earn the employee's goodwill, assuming that the lockdown opens on 4th of May, because 40 days loss, we definitely can make use of that afterwards by doing additional work for the clients. But the only problem is a lot of our clients will also suffer, because of which they will either close down, or people who are running will probably ask for a reduced fee from our side. But all that I can say is what we have probably thought about is maybe we will exchange this leave with the future leave that they have otherwise eligible for. Because Delhi High Court, Telangana government, they have done such exchange of leaves. And the fourth, the goodwill angle and the business angle. If the business is really not in a position to pay the salaries, and by paying that they are actually going to wind up, then definitely there is no way that they can face the argument that can be put forth. Stimulus economic package, 1,70,000 crores was given to the Garib Kalyan scheme, to various schemes which I will not be getting into, in which the EPF of 24% scheme is also there. Employees Provident Fund scheme amended to allow non-refundable advance of 75% of the amount in the credit of EPF account, or 3 months basic wages plus DA, whichever is lower. This is one scheme which has come out. The final slide of mine is to show that the industry expectation from the government, tremendous. In fact, if you see the last line there, fiscal package rolled out to stabilize economy so far is only 1,70,000 crores, which actually in trillion rupees becomes 1.7 trillion rupees. US has announced $2.2 trillion, $2.2 trillion, so which is about 75 or 100 times more than what Indian package is. So therefore, the government industry has asked the government to come out with suitable relief, maybe in the form of interest-free or low-interest loans, or GST deferments and things like that. So if that comes, that would help the industry. That's a last pitch I would like to make. I can only say thank you so much, and I'm open for questions.
Questions. Gautam, question.
Yes.
Yes, please. Yeah, Pandaraj sir, so nice of you to have put up the thing. He says lockdown definitely not new for our fraternity. In fact, it has helped most of us become more skilled and knowledgeable through webinars. So true. Same with me, sir. And Pandaraj is the one who has tutored me. So I take this opportunity to thank my guru, Pandaraj, on this occasion. Srivatsa Balukaraya, employer contribution and employees contribution both come under government grant. No, sir. I mean, what I would say is because employees' contribution is going to the employee, which I would have otherwise deducted from him and paid to the government. So therefore, employees' contribution is not a government grant in my books of accounts. Only employers' contribution is the government grant in my books of accounts. Although from the government's side, both the employer's contribution and the employee's contribution is a grant. No, so to the extent of the employee's contribution, it is a grant from the government to the employee. To the extent of the employer's contribution, it is a government grant from the government to the employer. So therefore, only employer's contribution is taken as a government grant in my books of accounts. Srivatsa Balukaraya, employee. Okay, this is if LIC premium due on May 20 and paid in May 20, can it be claimed for 1920? This is slightly controversial. What is due for the month of 2020? What is due looks to be slightly controversial. Therefore, I think that it may not be allowed. Okay, because if you look into the anything shall stand within such time. So, in my opinion, it is not possible. Okay, what if the partnership deed is made on 1st of April on white paper to increase remuneration? The registration of partnership deed is optional. Sir, while it is right, sir, Mandaraj sir, that you can do it on a partnership deed, but how will you sign it? To sign it also, maybe you'll have to go to the office and get it signed. That could be a challenge unless you use the digital signature to sign it. Okay, so that could be a challenge. But definitely, I think you do it on a white paper if possible. If it is between husband and wife and people staying in the same house, you can do it. But beyond that, it may be an issue. Shiva Shankar, salary to be paid in March and the final TDS for 1920 done in April. Can these transactions be taken for financial year 1920? It has to be taken for 1920 only. Salary to be paid in the month of March is due for 1920. So therefore, Chandrakant Rao sir, whom I respect a lot, I'm happy that you are here. Online application made before lockdown period and not having certificate for 1920. Online application, are you referring to? I think you are referring to TDS, sir.
Form 13.
Yeah, Form 13. I already told you, sir, that online application made before lockdown period and not having certificate for situation 1920. You will have to wait for your application to get renewed, because the first two relief is only for those who have got a certificate last year. You come under the third situation, where third situation is talking about where the application is not made. Yes, I have not heard that. This where the application is made and you did not have it last year, you'll have to wait for the assessing officer. Maybe he has to work it out on a first in first out basis and give you the lower deduction at the earliest. So please follow it up with him. That's the only relief that you can do. Srivatsa is the most active member of Mangaluru branch, as I see. Is it actual extension of due date under GST or waiver of interest and penalty for class of registered persons for 3B? I don't understand this question. Is it actual extension of due date under GST? If it is with respect to 3B, the answer is very simple. With respect to filing fee, late filing fee, there is a actual extension. Okay, they have extended it up to 30th of June. But if you don't pay it on 30th of June, the late filing fee will be from the original due date. With respect to the payment on 3B, I already told you less than 5 crores, more than 5 crores. Less than 5 crores, you can take it up to 30th of last week of June. More than 5 crores, you have to pay it by the due date. If there is a delay, you will pay 9% interest instead of 18% interest. Whether extension time is available for GST registration. Although it has not been specifically spelled out, the logical answer to this is yes. It is a definite yes, because all the due dates which happen between 20th of March to 29th of June, if it is done on 30th of June, it is considered to be a good enough compliance. So even if there is a delay, that should be considered as a good enough compliance. You will not be penalized. Ravindra Shanal.
For opting composition also up to 30th June is there, no?
Yes. No, I think that they have told opting composition is up to 31st. Yeah, 30th of June, I mentioned that. Srivatsa Balukaraya. So any more questions for Srivatsa Balukaraya? Should be penalized. Okay. The ordinance says all due dates extended till 30th June 2020, then why again various dates prescribed under GST return filing? Now, what they mean is due date with respect to filing has got extended. With respect to payments, they have given the different due dates. Yes, sir. Next. Next. Any extension with respect to DCCO for NPO, NPA classification? DCCO means what is the full form of DCCO? It's actually construction commencement, date of construction and commencement for setting up, when you're taking a loan for setting up a project, 2 years time is given, and beyond that 1 year time is given. So there is no relaxation with DCCO for NPA classification for normal entities. However, for those which has been given by NBFC to a project, that they have got 1 year extension under the 17th April RBI Governor's address. Though amendment bill is not passed, but can excess CSR spent be transferred to prepaid expenses instead of expensing off as of 31st of March 2020? That's a very, very Manish Joshi from Bangalore. I know him. It's a very good question. See, for 1920 to take this entry, while it is possible, we don't know when this amendment bill will actually get notified. So from that date, so you can do that. You can do that and see if it is anything that is required to be spent in 2021. You can say that I've already spent it in 1920, could be a way out. Yeah, next. As per LUT for exports under GST, within 90 days, the exporter is supposed to export. Whether this lockdown period days will be considered so as to make 90 days by 90 days plus. In my opinion, yes. Because again, they have told any compliance by the taxpayer from 20th March to 29th of June is considered to be 30th of June. So this lockdown, why lockdown period between these two dates, if this happens, you get extended by up to 30th of June. I would not say 90 days, but please calculate accordingly. Can CSR excess spend be classified to prepaid account as of 31st of March 2020 instead of expensing off through amendment bill not passed? Can CSR spend be classified to prepaid account? If you have already spent, by 31st of March, and if it is pertaining to that year, I don't think you can call it as a prepaid. If it is excess spent, maybe you can push it as prepaid. ATC payments made before 30th June. Does SSC have the option to take it for 2021? Absolutely. I mean, that's what I think the first question also said. But if that payment happened to be for the next year, if it is a due pertaining to the next year, then I'm afraid it may not be. But if it is pertaining to the previous year or any year for that matter, it can be 3 years old payment due, but made now, because LIC payment is done, claim is done based on payment, so you can still claim it. Balachandra PR. Since estimating income for 2021 would be difficult, what about interest payable in case of shortfall in payment of advance tax? Can we expect any relaxation? You please expect, sir. I don't have a problem. For the moment, there is nothing in the law. Thanks for a super virtual learning session, Acharya sir. Let us soon meet for further learning session post-COVID on physical mode. Loka samasta sukhino bhavantu. Thank you so much, sir. I'm so grateful to Chandrakant. Question and session completed. Wow. So thank you so much. I can only put up my last slide once more, just to say that I started off with VUCA. VUCA there standing for volatility, uncertainty, complexity, and ambiguity. And we have to deal with the situation of VUCA with another VUCA, which is proper vision, clear understanding, absolute clarity, and great amount of agility, which we and you, both being CAs, can certainly face VUCA. You know, VUCA has the word CA in it, so I can definitely say that you being CAs can face VUCA with the great amount of alacrity. Thank you so much, Mangalore branch. Thank you, Captain Nayak. Thank you, Gautam Pai and Gautam Nayak, for enriching my knowledge, for making me prepare for this session.
Thank you, sir. It's my privilege to offer this vote of thanks. First of all, you have made actual presentation on relief under the various laws because you have touched income tax, GST, banking, FDI, whatnot. You have touched, the COVID relief from all the perspectives. So thank you for giving us an opportunity to host you. So we look forward to have more webinars with you in case this kind of a situation goes ahead. Let's hope that it doesn't happen so. Further, I would also like to
It
thank.
is like a buffet dinner, even during lockout.
The only problem with the lockout session is I don't get Achal.
We will give with interest, sir.
I don't get
Interest I will give.
Mangalore is known for cashew nuts, and every time I come and speak in Mangalore, I get a packet of cashew nuts. But today, I am unlucky not to get it, but I'm sure.
Not even peanut.
No, not. But Nayak has been kind enough to come with cashew nuts whenever he comes to my office. I thought that was given in advance to me for a session like this.
I will give it to you, sir. Don't worry. I have already bought and kept in my house.
Oh,
Thank
very
you.
nice. Further, thanks are also due to all the viewers. We from the Mangalore branch are extremely happy that we have viewers from outside the Mangalore jurisdiction as well. Thanks are also due to the two applications, YouTube and StreamYard, for making available this kind of a platform for delivering this webinar. And special thanks to Prasanna Shanay, the treasurer of our Mangalore branch, who has been coordinating this entire program in a very efficient manner. So I hope all the questions that have been posted by the viewers has been very beautifully answered by today's speaker. Thank you, one and all. Have a great day. Bye.
Thank you, sir. Happy Acharya Trati.